it produced some of the most ridiculously low stock prices that I've ever seen in my life. In fact, I mean, you could go back to 1932 in this country and you wouldn't have seen things any cheaper. And in the meantime, the companies rebuilt their balance sheets and their earning power. So things do turn around in financial markets. You will, if you're young enough, you will see everything and then some. I mentioned in the annual report, in looking for an investment manager to succeed me, that we care enormously about finding somebody who's not cognizant of everything risky that's already happened, but that also can envision things that have not yet been experienced. That's our job in the insurance business, and it's our job in the investment business. And there are a lot of people that just don't seem to, they're very smart, but they're just not wired to think about troubles that they haven't actually witnessed before. But, that's the problem Noah had. The first 40 days it was tough sledding for Noah. But he got revenge eventually. You could very well see some exogenous event that starts feeding on itself in markets. In fact, I think it's much more prone to feed on itself in markets than in most periods in the past. If you really got a shock to the system. And that would result in a huge widening of credit spreads, cheaper equity prices, all kinds of things that actually are helpful to Berkshire because we usually have at least some money around to do something at times like that. There will be periods like that. If you go back 30 or 40 years, when credit contracted, it just really wasn't available. Charlie and I went through a couple of periods like that. We were trying to buy a bank in Chicago 40 or so years ago, and the only people that would lend it to us in the world, because the banks weren't lending for acquisitions, we found some people over in Kuwait who said they'd lend it to us in dinars. And we thought, it might be fine to borrow it, but when it came time to pay them back the dinars, they would probably be telling us what the dinar was worth. So we passed on that particular deal. I mean, you had real credit contractions then. And of course, the whole reason, I would say the major reason the Federal Reserve was established was the huge contractions in credit that were felt, particularly here in places like the Midwest, where they were dependent on correspondent banks in the larger cities. And when those banks had problems, the banks here got shut off. And we really needed a system that would not have that happen except by design. And I would say the Fed, by design, is probably not going to produce any credit crunches. Charlie?
Well, the last time we had that credit contraction, we made a quick $3 or $4 billion, and we were acting with vigor. The whole investment world is more and more competitive, and if you talk about a real credit contraction, which gums up the whole civilization, no one would welcome that. And I would predict that if we ever had a really big credit contraction, after a period like the one we're in with all this excess, which is causing so much envy and resentment, that we would get legislation that most of us wouldn't like.
Yeah, there's a book by Jonathan Alder that came out about a year ago that talks about the first 100 days after Roosevelt took over, and by the nature of the book, it tells about some of the days before that too. But if you want to get an example of, this country was close to the brink at that point, and basically Roosevelt got anything he passed he wanted just as fast as they could write the bills there initially, and that was a good thing. With banks closing and people dealing in script and that sort of thing. So nobody wants that to come back, and we've learned a lot more about that sort of thing since the Great Depression. I don't think you'll see an orchestrated credit contraction. Now, you had in 1998, in the fall, when long-term capital management got in trouble, you had a seize up of the credit markets. It wasn't an orchestrated by the Fed type contraction. You simply had people panicked about even the safest of instruments and credit spreads doing things that they'd never done before. And that's rather an interesting example because that was not 100 years ago. It was less than 10 years ago. You had all kinds of people with high IQs in Wall Street. You had all kinds of people with cash available. And you had some really, really extraordinary things happen in credit markets simply because people panicked and they felt other people were going to panic. And you get these second and third degree type reactions in markets. We will see that sort of thing again. It won't be the same, but as Mark Twain said, history doesn't repeat itself, but it rhymes. And we will have something that rhymes with 1998. Number 6, I didn't necessarily understand what was going to happen in Japan before it happened. And my insight into Chinese banks is about zero. We've been offered chances to buy into various Chinese banks. And again, because I don't know anything about them, I pass. It's no judgment that there's anything bad. It just means that sitting in Omaha, Nebraska, not knowing what some item of loans and advances, what composes it or anything about the real operation of the place, that I can make a decision whether it's worth X, half of X, 2X, quarter of X. I just don't know. And I really don't know. I just have no notion as to the answer to your question, but maybe Charlie does.
Well, if you stop to think about it, all of the remarkable economic progress that we've seen in China in the last 15 years has been accompanied by practices in their government banks that would make you shudder if you compared them to normal banking standards. So everything you see in terms of progress has occurred despite the banks were almost doling out money for aid as distinguished from doing normal banking. So I'd be very leery of predicting that that's sure to cause a huge economic collapse in Japan, in China. They've been doing it for a long time, and they may actually be getting better now.
Yeah, we've had our share of banking troubles in this country. I mean, it wasn't that long ago in terms of the savings and loan crisis and all kinds of things. And strong economies come through those things. So, if ahead of time you'd seen all the problems with foreign loans that the commercial banks got into, all the problems with real estate loans that the savings loans got into, you could have said, it's going to be terrible for the American economy. And it did produce a lot of dislocations and all of that. But if you look at the record of the American economy, it's come through all kinds of financial crises with the real output per capita rising at a very substantial rate just decade after decade. I don't know what will happen in China. I think it's pretty amazing in terms of the gains that have been made, and I think they'll continue to be made. I don't know what will happen with the banking system, though. Number 6.